Hey guys, what's up? How's it going? Robin here once again, and welcome back today for another update on the channel. In today's video, I'm going to be giving you guys an update on our Canadian-based dividend portfolio, and I'm going to be showing you guys what stocks I'm going to be buying in today's video as well. So just a quick little introductory here if you guys are brand new to the channel. This is a channel based around Canadian-based investing, more specifically dividend investing with Wealthsimple Trade. And I've been doing these update videos on a regular basis, just showing you guys, how I've been building my portfolio and showing you guys the results that I've been getting with my portfolio over time. So in today's video, like I mentioned, we'll do a stock portfolio update. I'll give you guys an update on my two portfolios. We'll start the video off with that, and then I'll show you guys what stocks I'm going to be buying, and then I'll show you guys the dividend income and whatnot that I've made inside the portfolio since we first started investing back in 2020. So if you guys enjoyed this video and you want to help out the channel, please be sure to smash the like button. It really helps out, and subscribe to the channel if you guys want to follow alongside with me with my dividend investing journey. And if you guys want, there'll be some links to Wealthsimple Trade and whatnot if you guys want to use my links in the description of this video. Alright, so the first thing we'll cover is the portfolios that we have inside Wealthsimple Trade. So here's the total of our two portfolios we have. We first started a TFSA, which we're pretty close to maxing, and then we have a personal account. And these are the two accounts that I have in Wealthsimple Trade. I do have another TFSA in Wealthsimple Invest that I do kind of updates here and there on the channel, but the main focus here on this channel is my Wealthsimple Trade dividend-based portfolio. So we have a total of $31,000 if we add the two portfolios together, and that consists of a TFSA and a personal account. So the first account we'll kind of go over really quickly is going to be the TFSA, since it is our oldest account, and this account is over the past day is down -1%, so a bit of a dip in the stock market this morning. Over the past week it's at 0%. Over the past month it's up 1%, which is $400, and you guys can see it's a lot bigger value, so there's bigger jumps, like the little percentages really do add up. Over the past month, it's up 8%, which is $2,182. Over the past year, it is up 14%, which is pretty cool, up $3,658, and all time it is up about 13%, just a little bit over $3,000. So TFSA has been doing pretty good, and it really is just a solid basic portfolio of Canadian with a little bit of US stocks as well. So let's jump over the personal account and let's see how that account is doing. Alright, so the personal account is a little bit newer. We just started investing in the personal account, I think over the past month or two. It was since we first started it, but it's been growing pretty quickly. As you guys can see here, we're at $2,000 over the past day. Once again, which would be this morning, it's down to -4%. So again, we can see a decrease. The two portfolios are going to mirror each other for the most part as we get the personal account started, but over time, it will probably change a little bit. Over the past week, the personal account is at 0%. Over the past month, it's up 1%, which is only $11. Like I said, because we're with a lot lesser value of money, it's going to be slow decreases, but it's a good way to kind of see the ups and downs of the stock market when you invest with a small amount like this. And over the past 3 months, it's up 1%. 1 year, 1%. Like I said, it's only been a month old, so it's going to kind of be the same there. But as you guys can see, we're slowly growing this personal account out over time. And here's a quick little update on the holdings for the personal account. So once again, this is the one we're really focusing on building up. The main ETF we have right now is VDY, which is a Vanguard-based Canadian high dividend yield ETF. A lot of good solid Canadian companies. A lot of the more popular companies are in there. It's going to be the main ETF that we hold. It's also the main one we have in our TFSA that has performed really well. Then we have TD, which is our main bank stock. I'm probably just going to be buying TD inside this portfolio. It's my favorite bank stock. Really, really good bank stock. They just keep growing. It's like I think TD is, in my opinion, the best Canadian bank stock. We have 5 shares. We will slowly be growing this over time. It's up 1%. And then we have Manulife, which is another finance-based stock. It's going to be my main finance stock inside this portfolio. Once again, it's up 15%. We just started buying this. We have 13 shares. And today we're going to kind of diversify the portfolio a little bit more. And I'm going to be buying a utility stock. And I'm only going to be focusing on 1 or 2 utility stocks inside this portfolio. And the main one I'm going to be buying today is Algonquin Power and Utilities. So like I mentioned earlier, the stock we're going to be focused on today is Algonquin Power and Utilities, or AQN is the ticker for short. This is a really cool growth-based utility company, actually a renewable growth-based utilities company. So this is a company that's done really, really well over the past little while. It's growing really, really well. And because it is a renewable-based energy company, renewable-based energy companies have done really well. Now the stock over the past little while, and see over the past year, actually, let's talk about the previous history. So the past 5 years, it's up 76%, so quite a bit of growth. We've seen a bit of a dip in the pandemic here, and then we've seen a bit of a dip recently. Now, they had a bit of a trouble. They had a bit of a storm that's took out a bunch of their units somewhere in, I think it was Texas in the States. So they had a little bit of a little bit of a downhill slope over the past little while, but once again, this is a long-term company that is going to do really well. It's got great dividend growth. It's got great earnings. It's got a low payout ratio, and it just, because it is that that renewable source of energy, I just think that's going to be really, really popular going over the next couple years. And I think a lot of people agree with me on that. So to go over some numbers here really quickly, guys, the company is pretty big. I'm just looking up all this information on Wealth Simple Trade to make it really easy for you guys to see. But the market cap of the company is 11, almost $12 billion. So it is a pretty big company. It's got a PE ratio of 11. Its 52-week high is $22 and its 52-week low is $16. So you guys can see it's actually going by quite a bit now, and it is dipped down quite a bit over the past little while, but it will recover just because it is a really good company. And its yield is currently 4%. So it's got a pretty good established yield, and that yield has been growing quite a bit. And I'm going to jump over to Yahoo Finance here. And I just want to show you guys how the earnings have been growing over the past couple years. All right, and one of the big things I look at when I pick stocks is the stock regularly on a consistent basis growing its earnings. If a stock is growing its earnings, then chances are it's a company that's growing, it's doing really well, and we're going to see that stock price appreciation grow over time as more people buy the stock, as we can see it grow, and we're going to see some good dividend growth over time as well. So you look at a company like Algonquin Power and Utilities, you can just see their earnings have just been consistently growing over the past couple years. 2017 earnings was 100 million, 2018 184 million. You see, you've just seen some pretty consistent growth, and even last year during the pandemic, it's been pretty consistently growing. If we go quarterly, we can see once again quarters have been up and down, but we still see like that steady increase in earnings. So I think this is a really good growth-based company that's got pushed down quite a bit, and I think in going into the future, it's definitely going to be a really good company to buy with a really nice good dividend income, which really fits our portfolio really well. Head on over to back to Wealth Simple Trade here, guys. This is the stock I'm going to be buying. So I'm going to be buying about 100 shares of Algonquin Power and Utilities. We'll put that order through here. We'll put that through into the personal account. So that's about $97 Canadian. And the rest of our money that we actually have inside our account, I'm actually going to put into some of the stocks we already have. Since my goal inside this portfolio is to basically keep buying the same stocks that I have, because they're always good, solid companies. We don't have to really worry about them. They're always going to grow over time. So we have $90 left today. So we could either put a share into TD, or we could put a share in the Manulife. And I think today what we're going to do is I'm going to put a share into TD, because once again, we have pretty much the same value here, and I haven't bought TD for a while, so I'm going to put that extra $90 back into TD. Alright guys, so here's the dividend income for the portfolio. I know a lot of you guys have always asked me to do these updates, and here's the main part of the channel here. So show you guys how over time a portfolio can earn and grow and also get that dividend income, since we do intend on living on our dividends to some degree going into the future. I don't know if this will ever happen 100%, but give or take, I know we can already see that the dividend income is really starting to add up. You know, in the beginning, in January of 2020, that's when we first started this portfolio. I'll zoom in a little bit so you guys can see a little bit better. But as you guys can see here, the portfolio has just been consistently growing on a regular basis, with that dividend income just adding up over time. And throughout the whole entire time that we've done this kind of case study, and I'll show you guys these videos, I've been kind of role playing, trying to live off my dividend income, trying to use it to buy simple little things I enjoy in life. And it's also teaching me to be frugal and save my money. So you guys can see here going towards the end here, we have $50 in December, $37 in January, $50 in February, $70 in March, and then we hit $100. Well, this is a big breakthrough for us. We never hit $100 before. We hit $100 in dividend income for the portfolio for April. Now we got really lucky because basically every single stock we had paid a dividend, so we're probably not going to get a hit $100 for May, but at the end of the day, it still feels pretty cool to finally hit that $100 a month. And it's such a big increase over, if we go back to April of last year, we were making about $7 to $10 or so, and now we're at $100. So, I've also obviously been really aggressively growing the portfolio over the past little while, but you guys can just see how I'm just basically throwing every little bit of cash that I have back inside the portfolio to keep growing that income. And the total income in terms of dividends earned is $529 inside the portfolio. So that's pretty cool. And before we end this video here, guys, I'll do a quick little update. In the last video, I mentioned that I was buying some new movies and I was going to watch some new movies. So I'll show you guys what movie I'm going to be watching today later on, and I'll be adding it to our dividend income spreadsheet so you guys can see what I'm spending my dividend income on, and how we're kind of enjoying some of the more simpler things in life. So let's take a quick peek at that. All right, so as you guys can see here, here's my things I want to buy with my dividend spreadsheet. It's just kind of really basic way of me tracking different things I've been buying with my dividend income. And you guys see at the bottom here, we have two movies here. I bought a movie the other day, which was The Departed, and here's the other movie that I have in today's video. And I'll show you guys this in just a second. So they were each about $7 each. I bought them off Amazon for a DVD, which is a pretty good price. And if we go over to the right here, you can see the total cost of everything that I bought in the spreadsheet. And we'll go back over here. And you guys can see it's just a lot of simple stuff. So in today's videos, we're going to focus on movies. So let's check out the movie that I'm going to be watching later on in today's video. Alright, so as you guys can see here, this is Blade Runner. This is a really interesting looking movie. So I picked, once again, these movies from a top movie list. I've just kind of been randomly picking them. As you guys can see, I haven't watched this yet. I'm going to watch it later on today because it's still got the plastic on it here. But this movie looks really cool. I'm really excited for this. I think it's going to be really, really fun to watch. And I'll just kind of take off the plastic here really quickly for you guys so that we can actually take a quick little peek inside here. Here it is without the plastic on. I'll just try to open it up here for you guys so you can actually see the actual disc here. And like I said, I did get it on DVD, and here's a cool little disc of a good old Harrison Ford here. So this would be a pretty cool movie. I've heard of it before, and I'm pretty excited to watch it. So I'll be watching this afternoon, and I'll let you guys know what I think later on. Alright guys, that's it for this video, so let me know what you guys think in the comments. If you guys have any questions, whatnot, I'll try to get back to your comments as quickly as possible. But thanks for watching guys, hope you guys enjoyed the video, take care, and I'll see you guys later.